How safe is your money? That's the conversation right here on the Trading Bell. Welcome to the show. We're going to host Helen Chepkwony, who is the CEO of KDIC, who work a lot with the banks to ensure that there's safety when it comes to your deposits. Let's get straight to the conversation. Mrs. Helen Chepkwony is the Chief Executive Officer of the Kenya Deposit Insurance Corporation, KDIC. She brings over 20 years of experience in leadership and management within the financial sector. She holds a Master's of Arts and a Bachelor of Arts degree in Economics from the University of Nairobi and has worked in both public and private sectors with a focus on building strong teams and improving processes to enhance efficiency and productivity. Before becoming CEO, she served as the head of risk and bank examination at KDIC, where she played a key role in the corporation's transition into a fully fledged state corporation and deposit insurer. She also previously worked at the Central Bank of Kenya as an economist and risk professional. Ms. Chepkwony is the Deputy Secretary General of the Africa Regional Committee and an Executive Council member of the International Association of Deposit Insurers. This reflects her contribution to strengthening deposit insurance both locally and internationally. Mrs. Helen Chepkwony, welcome to the show.
Thank you very much.
Excellent, and thank you so much for hosting us here. And I would like to start from the basics because a lot of people can hear the acronym KDIC, and I would like to give you the privilege of explaining to us what KDIC is and how you are faring on when it comes to the banking sector here in Kenya in terms of your mandate.
Thank you very much.
Yeah.
KDIC is an acronym for Kenya Deposit Insurance Corporation, which is a state corporation that was set up basically to protect depositors. So our main mandate is that of providing deposit insurance to the public, the depositing public, through the commercial banks and microfinance institutions that they bank with that are regulated by the central bank. Currently, we have 52 institutions who are our members, whose money are protected with us. So our other mandate is to provide prompt payments in the unlikely event of a bank failure. So if in case a bank was to fail, we are expected to provide payments to those depositors up to the protected amount of 500,000 shillings.
Okay.
So that is basically what we do. And over and above the protected deposits, we go into liquidation and recover monies from the debtors of that failed bank and therefore pay over and above the 500,000 shillings that is automatically paid immediately when a bank fails.
Okay.
So so basically under the KDI Act, we are supposed to, our mandate is to receive banks. We do receivership, we liquidate banks, and we wind them up. Lovely. At the same time. And we were set up as what we call a risk minimizer. A risk minimizer is a deposit insurer that ensures that banks do not fail. So we put so much of our efforts in early interventions or preventing banks from failing, because we understand that when a bank fails, it causes a lot of disruptions to the markets. So basically, I can just say in a nutshell, that's our job.
That's quite comprehensive. And speaking about bank failure, and that you are there to mitigate this, I would want you to explain a little bit more. When we talk about mitigating this, and this is good news to Kenyans especially, because now they know, because we have had stories sometimes, we've had banks that were there, we have names that are no longer there. How do you do this to mitigate this so that at least we don't have a repeat of those kind of times when we have had these moments?
So as a risk minimizer, what we do is that we have set up a point-to-point network with all our member institutions. So we receive data on a regular basis, on a monthly, quarterly, and annual basis
from the banks.
And we do analysis on those. We profile those banks to see the health of those institutions. So whenever we see banks is deteriorating, then we have interactions with them. And we have close collaborations with the Central Bank of Kenya, who are the regulator of these banks. And therefore, we look at ways of how they can be facilitated. And through some of them are through mergers and acquisitions, if in case an institution is not healthy enough and therefore are able to get an acquirer to avoid a situation where those banks are closed. So that is one area we look at the mitigation and interventions.
Yeah, and I love that because there's a lot of things happening in the banking sector.
Yes.
Anytime we look at the regulator, central bank, even talking to the Kenya Bankers Association, they're constantly in engagements, waiting to see what the central bank will say and the likes. And I love the fact that you have a role to play in that. But there's a statement that I want to qualify a little bit more because you've talked about coverage limit of about 500,000 shillings.
Yes.
I want Kenyans to understand what you mean by that when we talk about that figure per depositor per bank. Yes.
So we currently we have a protected amount of 500,000 per depositor. So what happens is when you deposit your money in the bank, up to 500,000 of your deposit within that bank is covered by KDIC. And that accounts for over 99% of all the accounts in the country.
Absolutely.
Yes, so they are fully covered. We have almost 99% of our accounts are fully covered.
Yeah.
So, but by value terms, it is much less. But basically, we were set up to cover for these small and sophisticated depositors, where at the time of 500,000, we fully cover over 90% of the depositors.
Okay. I know you have the reasons behind coming up with the figure of 500,000 shillings, but are there plans to probably even review?
Yes. We've listened to the public, we've listened to the banks, and we are currently in the process of reviewing that coverage. And what we have done is we've hired a consultant to look at the adequacy of our current coverage, so that if in case it is adequate, we do not change. But if it is not, then we'll be able to review the coverage upwards. And basically, the coverage is determined by the per capita income of our country, the deposit settings, in how the deposit levels are sitting in all the banks. And as I mentioned to you right now, we are covering 99% of the depositors. But we also need to consider the other huge corporate depositors as well, or the MSMEs, because these are institutions that they have more than the 500,000, and a failure of a bank really affects them. So we are considering all those factors in our review.
You're right, and I must say this from my own perspective: when we hear of a bank going down, it's big news. It's really big news. But we must appreciate your role, and I wanted to bring in this question on some of the strides that you have done then. I'd like to hear from your end when you're talking about enhancing speed, transparency, and accessibility of payout processes.
Yes.
Let us know, could you walk us through some of these key improvements and probably innovations that you're doing to ensure this happens?
Okay. So let me start from the technology side. One of the key innovations is the setting up of what we call the EDW, the Electronic Data Warehouse. So this is where now we have a point-to-point connections with all the commercial banks and microfinance institutions. That makes it much easier for us to access safely and in a timely manner the data, because we just pull from those institutions the data that we require, and it makes it much easier without any interruptions by anyone for us to be able to utilize that information for our access. We've also done mobile applications, mobile banking applications that are used by our debtors when they want to make payments to, the debtors of that failed bank who want to make payments for their debt. It's made much easier. We have also integrated with the e-Citizen platform, where our debtors or our depositors, we are able to have our depositors be paid through our integration with the e-Citizen platform and our mobile platform. Those are some of the innovations that have made it easier for our customers to be able to either be paid or pay for their debts.
In the advent of trying to encourage people to save, there's a lot of ways in which people are doing it. And the faster you can do it, the better. Otherwise, you will consume the money. So there's a lot of innovations behind how people can save, the apps, everything else, that at least to encourage people to save. And I'm curious to know, and many Kenyans as well are curious to know, is their money as well covered by KDIC? For example, if I save in a particular app or something of that sort, does your money extend to that?
Yes. Okay, let me start by saying that most of the digital value products that we have a backing in a trust account somewhere.
Yes.
So we come in as a deposit insurer, we consider the value in a trust account somewhere. So whatever transactions you are having on your mobile is backed up shilling by shilling with a real money somewhere, sitting somewhere.
Absolutely.
So that is where we come in. And we are currently covering those deposits for especially the M-Pesa transactions. And currently we are working on our law on the trust accounts, where banks will be asked to actually document the trust accounts that they are holding, so that each one of them is held on an individual basis. And therefore, even in the unlikely event of a failure, then each one of them will be accounted and paid for. Yes.
So let me ask a question. So what can you tell the public? Is their money safe even when they save on these particular apps? As you've said, there's a backend behind it. Can you assure them that?
Yes, their money is safe,
because
the banks that back them up are safe and resilient. And it is our motto as KDIC to enhance, or our mandate to enhance public confidence in Kenya's banking system. And we do that by telling people that their funds are backed up by KDIC. We have a fund that is supposed to support the banking system in the unlikely event of a problem. And therefore their money is safe.
Absolutely. I'm still going to dig that deeper, because one of the biggest things that we see is how hard it is for Kenyans to earn their money. And when they deposit their money and something happens, it's a big crisis. And I'm saying that because I think we know the effort that comes with trying to put up this cash, these monies. The other time I was having a conversation with the president of the UPTAC in terms of pensions and how they have to really protect this money for the people. Now, coming back to this, and with the assurance that you've given us, what would be a red flag that you can tell any depositor if someone is asking you to deposit money here or there or there? What is one thing that you can tell anyone who wants to deposit somewhere, that you must be certain of these things before you deposit your money to this app or to that app? Is there something you can tell them to watch out for?
I'm not so much conversant with the apps. What I would be more keen on is their connection to a bank.
Absolutely.
Yes.
And I think that's it. And I think that's it. I think what you're saying is, if there's any app asking you, find out whether they're connected to any bank.
Exactly.
Absolutely.
And whether that bank or microfinance is protected by KDIC. Because much of what goes on in the e-wallet has to be backed up. With a bank. And I can say that our banks are resilient. So once you know that they are connected to a bank, then they're safe. They are safer.
Absolutely.
And then we also have to look at the risk appetite of those apps. Some of them are providing very high interest rates that are questionable. High risk.
You're right.
Yes, so those are some of the red flags that I would look at.
Absolutely. So two things there. If the deal is too good, think twice as usual. And then number two, make sure it is backed by a bank. That's the only way to be sure of this. Let's move on to this. And I want to put in this question. So you're currently paying out protected deposits and even accepting late claims.
Yes.
So I wanted to ask you, can you tell us more about it and who should come forward?
Yes, we are currently paying out late payments for Imperial Bank and Chase Bank.
You're right.
By law, we are supposed to, once we announce for 2 years, we pay for a period of 2 years. But knowing Kenyans and the circumstances sometimes that could hold someone from coming to lodge their claims, we are still accepting and paying out for those institutions. In addition, we are also making payments, what we call dividends. That is an additional top-up on above the protected deposits for a bank called Kenya Finance Bank in liquidation. So I'll call upon Kenyans who had accounts with that bank to lodge their claims.
Wow. Now that you've mentioned the names, you've mentioned Imperial Bank, you've mentioned Chase Bank, and we have so many people probably who could be watching, and some of them probably, almost moved on. So you're telling them that, hey, please come forward, come pick your money.
Yes.
Wow.
Exactly.
That's a good
The protected amounts
yes.
that we, up to the 500,000. Those who have not lodged their claims, they are welcome to come and claim.
Absolutely.
And we make those payments.
I'm curious and really appreciating the effort, and you've promised that there are conversations you're listening to Kenyans to at least ensure even more and the likes. So if there was someone who had at least 1 million shillings, if they come and claim, they will only get their 500,000 shillings that was covered, right?
They will get their 500,000 immediately.
Yeah.
And through our recovery process, whenever we recover some amounts, we will also announce and pay the over and above.
Wow.
So, and in some banks, in some of the institutions in liquidation, we are at over 90%, 100% for some. People have gotten all their money. But there are some that we are still
in the process.
We are at 50% or so, or less. Yeah.
You know what, Madam Helen, I think this is very good news for people. In my opinion, from where I sit, the fact that you're still in process and you're trying as well to recover as much as you can for these people, that's actually very good news. Because there are people who really were devastated by the downfall of those two particular banks. And thank you so much for highlighting that. As we come to a close of this conversation, I want to highlight your new innovations and what you're doing in terms of changes at KDIC, and what are you working on right now to serve depositors better?
Well, I think I had mentioned some of them, especially on the electronic data warehouse. We are trying to utilize AI in order to have predictive arrangements to be able to determine, to predict the likelihood of failure of a bank, so that we can employ to ensure that that bank does not fail. So that is one of the areas we want to employ AI to be able to predict the likelihood of failure and to minimize loss and the disruptions to the market. Yes. The other one is innovations that will ensure that we make prompt payment to the depositors. Yes, and some of that might include amendments to our laws to ensure that we have a single customer view that will enable us to be able to tell exactly how much you are holding in that bank and the whole of that bank, so that it makes it easier for aggregation and payments, payout. So those are some of the areas we are looking at.
I love that.
The area of the trust accounts, we are also pushing through the amendments on our laws to ensure that banks are able to give us returns on the accounts that they are holding that are trust accounts, so that we are able to know our total exposures to these deposits and are therefore able to cover them.
Lovely. And these are very good milestones. From where you see it, in fact, from what you've mentioned, AI, there's a lot of data then that you're able to see a lot of things. In order to ask you, there's always a conversation of how Kenyans are not saving. Have they improved? Are you seeing some element of savings?
Yes. Incidentally, the levels of savings are increasing.
Okay.
Yes, and this is good because even from the FinAccess reports that we've seen financial inclusion increasing in our country. And that is also seen from the level of deposits that we are seeing being held in the banking system. Which is increasing.
Okay.
Yes.
Finally, I want to give you a chance to address Kenyans about really your message on saving and how their money is safe in the banking system. But even as you give your final word, I wanted to ask you, because you have the regulator there, CBK, and you must be having a lot of meetings sometimes with them just to talk about the health of the banking system, do you?
Yes, we do. We recently signed an MOU with them on information sharing. And we do have, of course, because we are kind of joined at the hip in this mandate of ensuring financial stability in the country and the health of these financial institutions. So we kind of give the 360 view from their supervisory perspective and from our side as a deposit insurer. There could be some areas that we support each other, and therefore close collaborations is a must, and we are having with them, and it's going on, and that is what is good for the health of the financial system in the country. So I wanted to say that we as KDIC we are here to support the financial system.
Yeah.
All those banks that have, who are members of KDIC, if you go to the bank and you see that this is a member of KDIC, you are safe to deposit your money there.
Yeah.
And your money is safe when in a bank. Yes.
I love that. I love that. Where are you saving? And that's the big question. The mattress is in a bank. But if you want to insure your money, make sure that you're saving in a bank. At least you're assured. As of now, your 500,000 shillings and below is already insured. And there are good conversations as well going on that this could even go up. And we wish it can happen even faster. Thank you so much for your time and for listening to us. That has been KDIC with Mrs. Helen Chepkwony, the CEO, right here at KDIC. And hope you've taken your takeout. Living out in the markets.